I had a lot of questions over the past few weeks about whether tech was going to continue to be a leader in this market. A lot of people are saying no, it doesn't need to be. What's the read-through on this Netflix surge today, and even Facebook, let alone Amazon and Alphabet following in behind?
Yeah, thanks for having me again. Listen, I do think that technology has to be an important component of this market to power forward. And because we're seeing the growth in technology, that is not hard for me to support as a portfolio manager. But I would also say that there is a lot to be said for tax loss selling. Now we're on the other side of that, and people are going back in and buying the stocks that they sold. I mean, that's the day-to-day practicality of what we have to do as portfolio managers at year end. So I like what I'm seeing. I like the potential price earnings to growth trade-off in these stocks, and we're still overweight technology with commitments not to Netflix but to Google and Facebook, Apple, Microsoft, and Cisco amongst our largest holdings.
Mike, you've noted that the S&P is up against some levels that people thought would be tough to break through. It seems like Netflix would be a poster child for that surge, given what it's done since December.
At the moment, kind of nosing above this 2,600 level. I think if you view what we're seeing in this more than 3 week rally right now as a rebuilding of risk appetites, the big growth stocks, the big tech stocks are down a lot more from their highs than the overall market is, even now, down more than 20% for the most part. So I do think that's a logical place to go. And if there was really an exaggerated shakeout in this growth scare in December and a lot of crowded hedge fund positions, I think that's why you're seeing people gravitate back to that area. So that would obviously help the indexes. I think in general, you have to kind of keep these two contrasting thoughts in your mind. Yes, the market is up against this tough spot that's actually been a challenge in the past to get through this sort of friction level. On the other hand, day to day, the market behavior has been encouraging. It's kind of, morning dips keep getting bought. It kind of rotates from weaker areas to stronger areas. The volatility index continues to bleed lower. So it's showing you that the market is feeling like it's getting back to something like a normal metabolism right now. So, and I think that the participation of the FANG stocks are part of that. Of course, yesterday they were bad laggards, so it's hard to really extrapolate too much.
Nancy, after selling off as much as they have, the tech stocks, is this one of the most attractive places to be putting money right now? Or when you look at earnings growth expectations for Q4, which actually shows that tech earnings are expected to grow some of the least of the S&P 500 sectors, are there other places to be looking?
Yeah, Morgan. Well, listen, I mean, we've been net sellers of the healthcare stocks where we've been overweight for about 3 years. And we've been putting the money back to work in selected parts of the market, in individual securities like a Broadcom in technology, like a Morgan Stanley in financials, companies that got hit pretty extraordinarily in the previous 6-month period. So I was kind of encouraged to Mike's point as well about how JP Morgan has sort of weathered today's earnings miss. It was a big miss, but the parts of the business that I care about, the economically sensitive parts of their business and the consumer, were very strong. So I think we're going to get a lot of mixed messages, and we're going to get some technology companies that are going to miss and some that are going to not miss as much or exceed. And if we can just get muted responses in the market, we can work our way out of this resistance point.
One comment that's ringing pretty loud today is Diamond's line about the shutdown, potentially bringing growth to zero if it goes on for months. Has that emerged in your mind as the overarching binary outcome for all kinds of investing?
It has in the very short term. So I do think it's obviously going to color all the estimates of the macro numbers for a while. But I can't help but think that 5 minutes after people say, oh no, look at the huge impact of the shutdown, we're going to be saying, well, that kind of gives a pass for a lot of the numbers. And we're going to be able to say that that was all shutdown related. And who knows what it means for the Fed, right? Is the Fed in January, when there's a live meeting, going to say, well, we have to kind of wait and see? Or are they going to say, we consider this a transitory factor, we're staying with our plan because the financial conditions that we were worried about in December have really improved a whole lot right now?
Right.